Now that the financial crisis is winding down and the global economy is recovering, where should investors put their money? Bill Gross, who runs the world's biggest mutual fund over at Pimco, says investors should focus on countries with less leverage and more savings. He joins us now from Newport Beach, California. Bill, great to have you back with us. So why this strategy and why now?
Well, it's an evolving strategy. It's not a point-in-time strategy, but it evolves and has evolved over the past several years. The market basically continues to categorize countries as developed and developing or developed and emerging. The fact is that the emerging markets, in terms of their deficits and in terms of their reserve creation and their growth rates over the past several years, have far surpassed what we came to know as the developed countries in terms of their rather stable fiscal situation. And so now the ball is shifting really in terms of the side of the court towards these former emerging countries and away from the developed countries.
So you like China, India, Brazil. Let me ask you about China because, they've created a lot of nervousness again in the market in terms of moves to slow down some of the growth that we're seeing in China, also to kind of slow down the lending. That doesn't at all persuade you away from China.
Well, let's be frank from the beginning, in terms of fixed income at least, that China is not really a market that you can invest in. And even from the standpoint of equities, it's very difficult. That's not to recognize, however, that China has grown substantially over the past 12 months and have provided a substantial fiscal and monetary stimulus to their economy that some consider to be in the bubble stage, at least in reference to its property sector. So yes, there are potential problems everywhere, but I would suggest that those countries with a fiscal balance, with a undeveloped consumer sector that can blossom over a long period of time and can leverage as opposed to delever, as we're seeing in the United States and the UK and elsewhere, is really the place to invest in, not just from the standpoint of stocks, but ultimately from the standpoint of the bond market as well.
All right, so as you focus on these emerging areas like China, India, and Brazil, your take on the U.S., you're pulling back, scaling back in terms of exposure?
Well, relative to some of the other developed markets. Now my piece this morning that spoke to the ring of fire suggests that you can't put all of your money into the emerging world, that you have to put a lot of those fixed income assets into developed markets. And when you do that, there are choices. The choices, as I tried to point out, should be significantly, not entirely, but significantly influenced by a propensity to save, a propensity to balance a budget. And in those countries, namely Germany and Canada versus the United States and the UK, to use four specific and rather large examples, are where we would move our money.
Hey, Bill, since we're lucky enough to have you here, we, as you would expect, have been talking an awful lot about Ben Bernanke and whether or not he gets a second term. It looks like he's gaining momentum among lawmakers to get that down in D.C. Do you think he deserves a second term?
Oh, certainly. I think, the furor over the past 7 days, 14 days, was really blown out of proportion and was really a political statement on the part of some that is trying to influence the future regulatory environment as opposed to the election of Ben Bernanke. This country deserves and needs Ben Bernanke in the future periods.
We're worse off without him, in your view?
Definitely. If anybody knows and has a sense of history in terms of the central bank, in terms of the Fed, it's Ben Bernanke. And my piece this morning that spoke to, again, to the ring of fire, spoke to historical examples in books such as It's Different This Time by Reinhardt and Rogoff, and by a McKinsey study that evidenced a flow of centuries of debt creation and leverage. And Ben Bernanke is certainly an expert in those types of evolvements.
All right, so Ben Bernanke deserves a second term. What about Timothy Geithner? Do you think he deserves to stay around? Is it necessary that he stay around as well?
Oh, I don't think we need to go that far. That's really a political decision that Washington will solve, I suppose. I think the administration in general has made some mistakes. They haven't emphasized job creation. They have emphasized Wall Street. There's no doubt that Wall Street needed to be more balanced and needed to be salvaged, so to speak, but long ago, and that's perhaps 6 to 12 months ago, the shift should have taken place from Wall Street to Main Street. It hasn't, and I think that's where the Obama administration has to go.
All right, we're going to leave it there. Bill, thank you so much, as always. We appreciate the time you find for us. Bill Gross over at Pimco.